you should still be a BPM client. You missed out. Welcome. Welcome everyone to the Kendall Report. It is Thursday night, the final broadcast for the week. And yes, I am back on at night. I'm glad you noticed. I've seen somebody watch the flash crash video. Nice to see me. Somebody mentioned they were a customer in 2009. That video was made back in those days. And anyway, welcome everyone. So, question is, did the markets overreach? As I mentioned in last night's video, we had an RTX sell signal, which means 1 to 2 days minimum of sideways action, which we got one of them today. S&P down 0.09, basically flat. NASDAQ had a slight uptick and Russell down 0.26. So as we come into the end of the week, we have big news in the morning. Probably will move the markets around a bit. We have employment numbers coming out expected to be 3.7. The jobs at 200K, and the participation rate supposed to be up one tick to 62.3. And that's something that Jay Powell was talking about the other day. Is the participation rate is off quite a bit. It's like I think 1.5, 1.3. Something like that. And that's a big number when you're looking at 300 million people. So yeah, there's I'm still thinking about something when we get these JOLTS numbers. I just wonder how real all of these, quote, I would do air quotes, jobs available really are. I saw some stats that's kind of interesting, is that we lost 435,000. This number may not be exact. It's pretty close to that. 437,000 full-time jobs and gained about 450,000 part-time jobs. A lot of people are working 2 jobs just to make things ends meet, and had the misfortune of buying groceries today And it's just crazy what's going on out there. So, I mean, the amount of increases in just about everything is pretty insane, to say the least. Let's take a quick look back before I get into some dialogue that I want to talk to you about tonight. Yesterday, we had PCE come in at 0.3. We saw a little blip when those numbers came out. The S&P was able to just trade briefly over 4,100. We got up to 4,110, I think was the number, and then we started to back down from there. And those of you that have the indicators know that the hourly was actually indicating that we are going to see declines into the session, and we're still seeing some potential overnight declines. The futures are down 13 handles right now, NASDAQ down 54. So there's still some downside risk coming in here. And one of the risks in this market right now is where we get the breakout, we get this 3% move the other day, and then we don't get the follow through. And there really was nothing to follow through today. And I didn't really expect it, mainly because we have this employment report coming out on Friday. So nobody's going to press anything too much ahead of that number. We'll see how the market finishes tomorrow. There's, I think, I was looking at all the things that are going on in the world right now, and all of the Western banks, for the most part, central banks are all tightening. Fed continues to pound on the table. There's, I think, 2 or 3 Fed speakers tomorrow. They're going to keep pounding this. We're going to raise rates. We got to keep them up for longer. Meanwhile, in Japan, they are actually doing QE yet. They're not tightening at all. They're the opposite. And meanwhile, the yen, which I talked a lot about going back several weeks ago when we were printing up at 151, the Japanese came in and did all kinds of purchases and bought the currency and bought bonds, and they did everything you would have thought was, okay, this is all wrong and that's not going to work. And it did work. And not only that, I'm wondering why is the Japanese yen actually going up? And the reason why it's going up is treasuries are going down, and they're the largest owner of U.S. treasuries there is. So you got treasuries. We printed amazing numbers. I've been talking about 340 handle on the 10-year, and I know some people probably think I'm crazy, but we finished at 353. That's just a crazy, crazy number. You would be thinking the opposite, especially as we come into getting closer to the Fed meeting on the 13th and 14th and all the expectations around that. But we now know this is, I guess, started by Helicopter Ben, in that we are seeing this complete transparency where the Fed doesn't want to ruffle anybody, don't want to upset the markets, don't want to do anything, except for they do want to talk them higher like they did the other day. But they are going to continue just to walk this thing forward as softly as they can, keep the bid in the market, try to keep everything going. So it's going to be interesting. I'll just tell you, on Sunday night, I'm going to go through a long-term analysis. So we're going to go through a monthly, going through quarterly charts and some other things. In the live room today, we did a deep dive. We probably spent 2 hours plus just talking about the PPMs, the algos, and everything that I use to make analysis and how to do deep analysis and multivariate analysis. And I do forms of that every night. I have a basic technique that I go through every day when I'm preparing for these meetings. So, we're just looking at this end of the week, the end of the second day of the month. Next week will be the first full week of the last month of the quarter, and there's going to be a lot of window dressing. The next 2 weeks, for the most part, prior to Christmas, is going to be where a lot of these moves are going to happen. So get ready for plenty more volatility, and that's for sure. Just looking at my notes here. Let's talk a little bit about this market overreaching. And what I mean by that is, did we move to, is 3% one day too much. And like I said earlier, if we don't get the follow through, I'll go through this in the technicals here in a few minutes, but if we don't get this follow through, this would be very detrimental to, I guess, the rally itself. It could start to taint it a little bit, and maybe there's some retracement that can happen in here. At the moment, everything's still long. If you recall, going way back, we had a model buy back at 31, I'll get this right, 3777, I think is the number. I'll look it up when we get live on the charts. But that is still in place. We're still seeing some long-term stuff. And I guess just a quick mention, I'll go through it here shortly, but what a day in gold, huh? I've been telling you for the last 3-4 weeks that the algos on the weekly were projecting a big move in gold. And we really got some crazy moves going on out there, especially with these rates dropping on the back end. Now, I am set up tonight to actually go through a yield curve situation, so I'll go through that here shortly when we go through the treasuries. Let's go ahead. I'm just looking at my notes here, and looks like I'm ready to go into. Let's get into the database and see what expectations are for Friday and for the end of the week model run. So here we go. We got 375 buys, 150 sells. So we did have a slight positive rotation. We're at 80.81. Yesterday we were at 80.25, so nothing big, but we continue to hang up in this 80 percentile range. And this is really setting the tone for the weekly models to step in pretty big. Now, the weekly models right now are at 36% bullish. We get above 42. I've showed you folks this chart multiple times this week. I'm going to bore you with it one more time here. And let's go to full screen. And this chart here is how this database works looking forward. Is once we get to 42, if we get to an intermediate 42%, that's going to project 100, 150 days in the future of a positive return. So what this means, if we get to 42, we typically will get to next level 68, 72. We could get to a higher level. And the bottom line is that this will give us some forward-looking type patterns as we go through as we go through the entire process and watch this database unfold. And I just want to come up for a minute here, and I really want you to understand that the way that everything's set up, and on Sunday night I'll cover this in detail, is the monthly and quarterly charts are going to show that we still have a positive undertone. I don't see an ATH all-time new high anytime real soon, but by the time we get into mid to late January, February, things are going to get pretty interesting is how it looks like things are set up. So I'll tease you with that, and we'll talk about that on Sunday night. Let's go ahead and get into the S&P. All right, I have the yen up here. Let me get to the right chart. Let's start with the daily S&P, and this is starting to get a little interesting. I mentioned last night that the algos are suggesting that we're not getting the kind of traction that we would expect to get an acceleration. Originally, if we were to go back and look at this script, if I reran the script historically, would see that the PPMs were being projected to be much stronger. What they're suggesting now is that we're going to stay in trend mode, and I want you to watch this 10 period moving average, the simple average. Don't have to be fancy, no exponential, no weighted, nothing. what you want to look at is watch that value. Right now it's at 40.16, and we also have the 200-day moving average at 40.21. As I told you the other night, all the probabilities were pointed to getting above these levels. The minimum upward projection here is for 42.59 on the pattern. That's this fib target. I mentioned last night that 41.30 to 42.59 is going to be a range to watch. And we got to 41.10 yesterday. Let me double check that number here real quick. Yeah, 41.10 is that number. I also told you I would check for this, for the signal real quick here. Let me just bring that up so I can show you where it was. So back on 1024, we got to buy at 37.71. I thought that was the right number. Good memory. You folks will know I'm losing it and getting senile when I don't remember those numbers. So that's a good sign. But anyway, so that trade has been on since 1024. I told you back then that this potentially is going to be an elongated trade similar to what we had going back into July when we had that trade going on. And it looks like that is what is developing fairly substantially. If I go over here just real quick and we go to the weekly, we also got a weekly buy 3 weeks ago here at 39.84. So it's basically flat on a weekly basis. But what I want to make a point about in these patterns is that these, for instance, the weekly is going to hold typically for a couple hundred days, and those aren't calendar days, those are market days. That's the better part of a year. There's 220 roughly days in a year, and that's what it's projecting forward, is that we have a chance to do that. Now, having said that, we've had a couple failed trades in this pattern, and I think sometimes you say that the third time's the charm. This is the third signal we've had as we've been trying to set up this pattern right along the 200-week moving average. So this is an important sequence, and I'm going to go back over to the trading views and look at the algos, because I want you to see the weekly algos, and I'll go through this in greater detail on Friday. But the algos on the weekly are suggesting that we've got at least 2 more weeks of strength, possibly 3, and that's likely to send us up into at least that 41.30, and I said 42.59. I'm going to go with 41.30, 41.93, which is the fib target 1 on the weekly. And even looking at the market grid for the weekly, you're looking at 41.19 is R2, so there's right into that range. R3 on a weekly would be 41.63. We've got big news coming out tomorrow to rally from where we are right now to get up there. Sure, why not? We could easily go 100 points. What's 100 points in the S&P anymore? But the bottom line is there's still a lot of positive rotation. The only thing I would, and like I said, I'll go into a lot of detail, and we'll go into a deep dive, and I'll go through the S&P expectations, especially coming into year end. As you know, I take off the last 2 weeks, so I want to get you completely well versed in what I'm expecting here as we come into the end of the year. Now, one of the things, I'm going to go back to daily for a second. We didn't cover the market grid. So what we're looking at for today, R1 is 40.97. I made a note that we'd probably see an S1, R1 on this. And so we're looking at R1, 40.97, R2, 41.20. That would be a new high from yesterday. That's certainly a possibility. And then S1 is 40.57. And so far, I believe we've been down to 65 overnight. So we're pretty close to printing an S1. Below that is going to throw us, looking at the market grid, that would throw us into a 40.34, start to put us back into these moving averages I was just talking about. I don't think we'll get that, but like I said, we got major news coming out tomorrow, so be ready. Watch these numbers that I'm talking about, the S1R1 as a pivot number. We take out the 97 level, 4097, then look for the next level, which is 4020, and look for some sort of rejection off a new high. I often like in these kind of patterns, selling a new high or buying a new low. So yesterday we got to 56, and an S2 print would be definitely down to 30. Let me get the right number. Would be down to 34. So anything below yesterday's low, you want to play these ranges from the opposite side when they're printing down at the low end. And let's go to the hourly chart because I haven't covered that. And the hourly algorithms here, this is 5 minutes. So let me get to the right place. Put this on here for 1 hour. So let me get to scaling. What's interesting about this, you may recall last night I told you that around the London opening was going to be looking at a negative. We were seeing this algo was actually declining substantially, suggesting that we're going to see a decline. Now, the decline looks fairly moderate, but next to a 3% gain, it would look that way. Yeah, we printed up to 40.94 and then overnight down to about 72 overnight, and the lows in this pattern. Then we got the blips off the PCE and all the news that came out this morning. And then we saw something that we talked about in the live room is we get one of these, you see where my cursor is, we get what's called a volatility bubble on the market grid. I was talking about this earlier. I don't think I've ever seen this type of pattern here, but on these shorter term charts, you'll see some things. But here's what's being forecasted. Still some downward pressure to be into the next 3 hours. Somewhere before the open in the morning, it looks like we're going to at least flatten off and maybe get back towards this, toward the, looks like 40.80, into that was resistance, 40.80, 40.97. We may see an early morning rally, so watch for that. And those of you that have the indicators, you'll be able to walk this forward. I've got this out about 10 bars right now is what the forecast. This is what's called an auto regression. It's a Booth method of math that's being applied here. They're incredibly accurate, and especially on the intraday charts, it's amazing what goes on there. But this is what's been forecasting. What's interesting is somewhere toward the end of the session tomorrow, we're starting to see some of the longer term chart start to roll off. But this is the thing I want to point out before I move on to the NASDAQ, is this 40 period moving average here right now is at 40.52. It's almost exactly where the market grid's coming at. That's going to be your point to watch. We do have 3 Fibonacci targets. Fibonacci target 1, 40.37, that's S2. And then we got target 2 is 40.15 and 40 even. I think we could see on the extreme tomorrow that S2 would be about it. And that should be a buying opportunity. But right now, what's being forecasted by the algos on this PPM3 is that we're going to stay in trend mode. So it suggests we will stay above the 40 period moving average. So look for that bounce off of 40.52. Look at that, the daily number I was just talking about here. Let me get over here to daily just so I can get the number here. It's 40.57. So it's actually just a perfect number to watch for some kind of bounce tomorrow. Okay, next we'll look at the daily NASDAQ. NASDAQ's got a little stronger profile than the S&P does, and that's fairly just based on the volatility levels, that relative volatility. But on the daily, it looks like we could be a little bit stronger, so maybe the NASDAQ's going to take a little bit of the lead, and the S&P won't be as as bullish as the NASDAQ is how it's looking. All of the algos are set up fairly good here, but the real elements, and I know just a couple of days ago, I was talking about printing at 12,000 level seemed completely ridiculous. And here we are at 12,000. And it looks like if we just look at the daily market grid here, S1, R1 is 12,116, S1, 11,956. So that's going to be your range. And then the next levels on R2 is 12,206 and S2 is 11,956. So those are going to be those ranges you're going to watch tomorrow. But I'm thinking S1, S2 print possibly on all of these indexes. But like I said, we've got major news coming out, which is telling us that anything's possible tomorrow. Who knows? I don't expect, you have to ask yourself, is good news good news or is bad news good news? Meaning if employment is down, let's say it's expected to be at 200,000 new jobs, let's say it comes in weaker than expected, is that bullish or is that bearish? I think it's probably bullish because everybody's going to be more convinced for the Fed to go to a pause or slow down the actions that they've been taking. And tomorrow, though, like I said, we have several Fed talkers out, and they're going to be throwing out, it's sort of like a book tour. Everybody's got the same script. And you can even go to the ECB, the Bank of England, you can go all around the country. The only place you're not going to get that script is in Japan. They're doing something completely different. They're still in quantitative easing. They're easing. And I saw from, I forget the guy's name now, that is the head of the Bank of Japan. He's like, we've got to keep loosening. He's pumping, So just to tie that together with some of the expectations of with the yen. That's why the yen's going down. We've got yields dropping. The 10-year, they own a ton of these things, like $1.2 trillion, something like that. They own a lot of these things. So the Japanese yen is being supported by the rally in the bonds that we're seeing right now. Yeah, so just know if I don't discuss or make any kind of different comments than what I covered on the S&P, those basic trends and those patterns I'm talking about flow all the way through all of these charts on the indexes. It's somewhat interesting here. Like I said, on the Russell, it is also starting to suggest that the stall here is a problem. We got above the 200. We've traded on both sides of it. There could be one more decline in here. It's going to be interesting the next couple of days on all these indexes. But it looks like there's solid support at the 10-period moving average across the board. PPM1 on the Russell is only at 0.17. So if you're on the indicators and you've watched the masterclass on the indicators, you know that 0.25 is a critical number, and it gives you probability. Today in the live room, we were going through the probability map and what all these numbers mean and how to interpret exactly what's going on with the moving averages, so you understand when they're trend lines, what type of action to expect around moving averages. It may be pretty simple to a lot of folks, but I've spent my entire career studying moving averages, and more particular, studying three moving averages, 10, 21, 40, and how the market is operating around those, and have built trading models and built a lot. I've built 3 different platforms of software over the last several years, and I'm glad that you folks are enjoying that video of watching the old floor days. It made me really miss out on a lot of stuff. I think that's what triggered me into a lot of things that we did in the live room today, just flashing back to, no pun intended, flashing back to the flash crash and just hearing the pit and the excitement that was there. I mean, I can tell you, when you walk in on a trading floor it was special. You just, there's nothing to ever explain it. Those of you that have done it, you know what I'm talking about. There's nothing like it. It's just a crazy, crazy feeling. There's nothing, I've never experienced anything else like that in my life, especially when it comes to money and excitement and fear, and all the emotions are there. So anyway, so basically going back to the Russell here, we're really seeing a moderation big time here of the upward momentum. So there's some risk, but not major risk, potential for a move down to the 40, which is 1806, would put us back underneath the 200. There's some risk here on the Russell. And yesterday it was the weakest of everything. S&P was down 0.9 and the Russell down 0.26. So it was weaker on a relative basis yesterday. Is it material? I don't think so, at least not yet. All right, folks, for me, this is just an amazing chart. This is the 10-year. To see it printing down at 353, I'm like, are you kidding? This is just absolutely amazing. I'm going to put on the fib ratios here. I just turned those on. And what I want you to see here is we hit fib target 3. I thought that was ridiculous. If you recall, just a few days ago, I thought, it looks like we're going to support it at the target 2. No way. We went all the way to 3. I want you to look at, that's 3.54 is that number. The previous was 364, 354. And I'm going to carry this to one more level here, because this is the daily. Let's go to the weekly. And let me just get this set up here. There's some bigger numbers out there yet. So fib target 1 on the weekly is for 337.50. The 21 period moving average right now is 346. So we've got a better than even chance of seeing 346, 347. And the question is that going to be it? And I want you to look at these algos. The algos are projecting that the 10 period moving average is going to be declining at a 2.4 plus number. And a 0.25 is a trend. 2.4, there is a monster downtrend, and this is a weekly chart. So this isn't going to change for a while. And I'm going to do a quick illustration here in just a minute with the talking about the yield curve a little bit, because I think this is going to be important to understand from that standpoint. But these yields are coming down big time, and these are material trends. PPM2 is still up, so it is right now at a plus 1.3. So that suggests there is a substantial amount of support at the 346 level, but we could easily spike down to 337. I expect we will basically do two things. We'll trade down toward this fib target 1 on the weekly, and we should be able to support around this 21 period moving average. And then we get into more of a trading range scenario from this standpoint, because what you're really looking at is that the patterns are still bullish on the intermediate trends along that 21 period moving average. So I'd expect the 246 and the high is going to be right now is 289, but that number is going to start to drop. It's going to be 286, 284. I'm sorry, 384 is going to be that major resistance on the upside, and maybe it's going to be 78 to 82, 84 tops. We should start to see some consolidation here just above this 21 period moving average. So let's go ahead and take a look at, bear with me 1 second. I just need a number. Okay, let's go ahead and take a look at the Oh, great. I just got a critical error. That's always nice. So let's go through the yield curve real quick here, because I think this is important. And I think ultimately the terminal rate is going to be around 525. Okay. And then, like I said, we're going to have Fed funds here. I just want to go through this again. 13-week, the 2-year, the 5, the 10, and the 30. So bear with my drawing skills here, okay? So we're going to end up somewhere probably on the Fed funds around 525. 13-week is going to be somewhere around here. I think we'll continue to see a potential blip in the 2-year, but we saw the 2-year drop to 423. So let's do this. 4, 3, 2, 1 on this outside. So we're probably going to see, I'm going to erase this and start over. We're probably going to see something like this. And then when we get to the 5 and 10, we're going to see this drop into this 3 handle and then a slight move on the upside. So these dots are going to connect like this. And so you'll see the yield curve will be inverted. So that's the talk of the town right now is, is this inversion does it mean a recession? I don't know that it does. It doesn't have to, but this is how the markets are going to be configured. And I talked about this before, that I think on this back end over here, we're looking at housing is going to affect here at the 10 to the 30 year. In this spectrum going down, this is going to keep these yields low because there's not going to be any demand. I noticed yesterday construction spending was down 0.3. If it has anything to do with building, real estate, any of that stuff, that's going to keep it down. So this is part of what the Fed wants, is this demand destruction. We're seeing some slight pricing changes going on. There's a lot of markets around the country that are down 30, 40+% in sales volume. Prices are starting to drop. I did something interesting on realtor.com. I went in and picked in different areas around the country and hearted different properties and different price ranges. I've got about 4 or 5 of them. And then what I get is messages on anything that changes with those properties. If they were sold, if price drops, all that. And the price drops, if you went through my messages on realtor.com, it's just price drop, price drop, price drop, price drop. The sales are getting further and further in between. So, but that's why this yield curve is set up like it is. And I think this will be a continued theme as we come into 23. And I think ultimately, maybe this 340, the numbers I just talked about on the 10-year, that's probably going to be about the extremes of this pattern. And so I just want you to have the understanding here of what's likely to happen when we're looking at all of this yield curve stuff. So, hopefully this helps you to understand. I'll talk about this more as we get in further into this economic cycle that we're trying to get into. Like I said, the Fed wants 2 things. I missed one. I also missed something I'll just bring in right now is these are my notes for tonight. Excuse me. What I want to bring into tonight is I mentioned that there's a couple metrics that the Fed is watching, and those metrics are I think they're looking at those JOLTS numbers, and they're looking at continuing claims. And I can't believe I missed this in my notes. I had all kinds of arrows pointing to it, making sure that I wouldn't forget it. But the continuing claims, I've been talking about it getting back over 1.5. Well, they moved up 57K to 1.608. And that's just, the Fed, they got to be really happy about this. There's more and more people unemployed. They're getting excited now. And the pain, like I told you, that they've been talking about is exactly what we're seeing here is they want unemployment. They want demand destruction. I mentioned the JOLTS number. I'm not sure those numbers are even real, just based on some of those stats I mentioned earlier when I was talking about the unemployment situation where there was 345,000 full-time jobs replaced by 450 part-time jobs. So in the case of a lot of these national metrics, a job is a job is a job. And in real terms, a job is not a job. And so it's very interesting, at least how they're playing these numbers. And I think I think that's why we're seeing yields print down like they are. We could go going further. The algos are suggesting we got these are the chart that I have up on the screen right now is a weekly. So we're looking at 10 weeks. We're looking at the potential for the next 2.5 months of these yields starting to go down. So the 60-40 guys, those of you that are doing that stuff, you're getting bailed out here because the bonds are rallying really nice and the market's got a firm note to it. So it's been a long time waiting. It's been a tough run for those folks. But we're starting to see that shift in assets actually happen right now. And I think it's because of everything that I'm talking to you about at the moment. Okay, next we've got crude oil, and crude managed to get a reasonable reversal. This is the weekly. So we have something very interesting set up here. The algos aren't too excited, but they are suggesting basically stable markets. We're PPM1, this is weekly crude oil, the front market, the front futures, and they're up at 0.29. We should start to get back above the 10-period moving average, 84.99. And if we can get above there and get a little more upside on here, the PPM2 is a minus 1.25. So your resistance, 87.74, that's going to be 86. So 86 is going to be your pivot. There's also a fib pivot number in there, 86.11. So you folks should know if you watch this channel for a while, I'm super excited when I see these clusters of numbers. So we've got a ton of clusters right here at the 86 handle. And so if we can get above that, then you'll probably print up toward the 40, which is up at 97, but we should start to stabilize here from that standpoint. We got almost to the Fibonacci 2. I've rattled on about this all week. The 70, it was 73.60 was the low, and that fib target was 71.76. So basically, I look at that satisfied. But here's what we're dealing with here. We have an outside week brewing right now. Last week, 82.36, 75.27. This week, 73.60, 83.34. So we have an outside reversal. And this will set up a tone. Hopefully, you folks will remind me not to hang on a second here. I see we got a bot in here. I'm supposed to have a backup here. Hang on 1 second. Bear with me. All right, so when we get these outside reversals, so next week we go to the 3-bar trade, which suggests we need to make a higher high. We can't make a lower low, and we close higher, we'll get an absolute reversal pattern, and we could get anywhere from 3 to 5 weeks on the upside. That's quite a lot to ask for. Algos aren't really participating in that thought, but we'll see how it sets up. This is a really key pattern that I always watch for. Yeah, I see somebody, John's 292 North Carolina. I can tell you right behind my office, a big gas station, 497 here. These guys are crooks. out here. There's no doubt. Yeah, thanks, Todd. I didn't see him. I was focused on the screen here. Okay, so let's go on and let's go to gold. It's a pretty exciting market here. So gold, this is the weekly. And if we went back several weeks ago, I was telling you this thing is projecting this monster move to the upside. Look what's happened. We've got since that was happening, out of the last 5 weeks, we had one down week that was right below the 40. And we also had 3 Fibonacci targets in here. We had 1764, 1820, 1854. We printed 1818 today. That is insane from that standpoint. We're really just looking at this pattern starting to explode. Now, in the live room today, and I'll show you here in a second, we went into the monthly, and the monthly still suggests there's some things to do here from the standpoint of the from the standpoint of these trends, longer term trends, but it's very interesting. So let's go ahead and do that. Yeah, let's look at the monthly here, and this was pretty key. Somehow, some way, just on yesterday when we closed the month out, we managed to close over the 10-month moving average. 1791 SMA 10-month. We actually closed at the let me just get the right number here. We closed up at the 1759. We closed, and now we're looking at a 1810 last price. This is up 50.7, and this is very bullish from this standpoint. And the algos are suggesting that we have some more upside, but my expectation is going to be for probably a consolidation, at least at these higher levels. And this is the new monthly targets for the market grid. So we look at what are the targets? 1829 R2, we basically have just about printed that. 1865, 1898, 1900. And I talked about there are some upward objectives that suggest that we could get up into head toward 2000 on the upside. So we're really looking at a general uptrend for the next couple months, at least stability here. And then I think we get consolidation, and then probably into second quarter, maybe we can set up something big, something like that. That is what it looks like to me anyway from this standpoint. All right, finally we'll cover Bitcoin. Bitcoin hanging around 16.9. I can tell you I was on a Twitter space today, and they had SBF on there. This guy is nuts. He completely incriminated himself in so many ways. There's some really top people that are involved in. Hang on, you guys got a screen? I'm just making sure because it's showing on my end. Yeah, Doug Sims, gold to 2000. That's very likely, and it's sometime next year. So we'll see. Yeah, so anyway, what you guys do have a screen, right? Okay, good. There's a big delay here, so I just want to make sure I'm not talking and it's blank. But yeah, the SPF thing, it was recorded. It was, I forget this guy's name, Mario something on Twitter. There were 35,000 people on this space. It was super interesting. They had some whistleblowers. I mean, this guy's toast. If he's not toast, then we're living in the most corrupt environment that there's ever been. Yeah, so a couple of things. I'd see some. I'll cover some of these questions you folks have before I leave. But anyway, Bitcoin continues to right here. We're on a weekly. There's resistance right in here where we are. It's interesting because the algos have actually moderated quite a bit. This lower number going out was at a -2.3. It was insane numbers. What it is suggesting, though, is that this is the last week up, and we're going to see the markets start to turn back south again coming next week. So be careful. I don't know if there's something that's going on here with this crook or more exchanges, whatever. But it was very interesting. I'll just come up on screen here for a minute, and that talking about how they were duping coins and trading basically synthetic coins, double accounting, all kinds of stuff was going on. And it was interesting. SPF was on there acting like, well, I just wasn't paying attention. He's trying to play this thing off. And he just wasn't paying attention. He didn't mean to do anything. And there were some people on there that were really calling this out that know that he knows what was going on. So he's trying to put this, he's going out into the public trying to get this sympathy thing. Pretty sad. And I hope they get this guy good. All right, we got another bot here. The Frankenstein guy. 1 second. I always say you're doing a good job when the bots are showing up. Those are good signs. Okay, so so let's talk about a couple things before we end some of these comments that are going on here. So basically, like I said, on the Bitcoin, I think next week is going to be the test for Bitcoin. And I think people are getting a little too confident. We're going to find out what's to this algo and what's been being projected for the last several weeks, and see if we get a follow through on the downside and the weakness. And matter of fact, from the standpoint, I just want to go back to that chart just for a second. Bear with me here. And what I want to see is where the downside risk is. It's going to be once again. Just want to put out there. It's the same numbers as before. It's going to be that 15.5, 15,250. That's going to be your key numbers. I know we printed just below that, but this is going to be the key again. Once again, we just rebounded back into the range. So watch that real quick. So a couple of things. Somebody was asking about someone was asking about the rail situation. I don't think they have the votes to get this thing done. I think it's getting scarier. And I would just suggest, as I mentioned last night, that I think there is a strong possibility that a lot of people are going to walk, even if they pass this deal. There's a whole segment of the workforce that is going to walk. These guys don't even get paid, by the way, for sick days. They get a couple days off a month. They get called into work. They have 2 hours to go to work, 24/7. They can be called anytime. 2 hours from the time they get a call, they better be to work. If they're not at work, I don't know for sure what happens. But it's absolutely crazy, insane, terrible work conditions. It's like you're in China and you're working for Apple. It's really, really sad. Maybe some of you can comment on there. And I think Yeah, I think this is, they don't have the votes. If they don't get the votes, maybe this is a little mini rollover. I'm not sure what's going on. They played up everything the best they can. So twice, Biden has said he had a deal last spring. He had it all figured out. Then we come into this tone. We have 7 days. A week from tomorrow will be the 9th, which is the deadline for this deal. So we'll see what comes out, because there's a couple big issues on the table that maybe Congress can get together, but I think they need 60 votes, and I don't think they have the votes. I really don't. So I'm just looking at some of these other comments here. Yeah, maybe it did. I haven't checked the news. I've been hanging out with you guys. So maybe it did, but it did pass. Okay. All right. Well, I can tell you this, then let's go to the next level if that's the case. The fact that they passed it, the crisis isn't over yet, because my information, which is, I believe, a valid source, is telling me that 10 to 15% of the workforce could walk off the job. So, and they're already shorthanded. So, yeah. Both out, yeah. They got to do it, right? But I don't think it's going to work for them. I think there's still going to be issues around this. So, yeah. So I didn't see that passing. Thanks for all that, folks. But yeah, earlier it didn't look like they had the vote. I'm just looking at some more comments here. Yeah. So, okay. I'm surprised I didn't see that earlier. Anyway, yeah, just to settle up, this is a final broadcast. Just remember, I'll be here on Sunday night, back on the evenings. I actually like this better. It's so much better in so many ways. I can't tell you. The early morning was cool to do, but there was no way to bring in a lot of perspective. When the markets are trading, people want to watch the markets trade. So it's a really bad time to be trying to distract you from the key, what I call probably the first hour, most important hour. I would rather not be live then. I thought it was a great idea. I was super excited about coming on in the morning. And I know there are people that liked it, but I didn't like it. Didn't feel like I got a lot of good perspective that I feel like I was able to deliver to you tonight. And in fact, yesterday in the live room, we tried to do an education thing, and then of course the markets blew up and it just got completely bizarre, crazy. So it's very hard sometimes to do things outside of watching the market during the market hours. So yeah, I'm just, yeah, it's going to be interesting to see what comes out of this. I can tell you the sentiment that I've heard is there's nobody happy that works for the railroads that the Senate is deciding what to do. Like I've kind of been trolling these guys the last couple nights, is that it doesn't look like they're respecting the unions at all. It's like, okay, if it's okay to have a union as long as you don't affect the economy. And as soon as you start to get to that point, then that happens. The history of this country, and especially going to unions, has everything, strikes have been a big part of the history of our country, and they've reformed a lot of the labor, I guess we'll call it the structure of labor in this country, and it's been for the good. And sometimes you have to go through the pain. And I was talking about this earlier in the live room, and I won't go too deep here because I want to close out the video for the night. But really what the transportation folks have the most impact right now, and the farmers in the Netherlands. We're looking at truckers, the trains, the shipping channels, the people at the docks, the longshoremen, all those folks have all the power right now. These people are supplying everything, and they have all the power to cause change and affect things. So I hope that they do the right things that are best for them and try to get some good work environment. And I'm a former union member. Back when I was a kid, I worked at the steel mills, and that was United States Steelworkers and Union. Was it USWA or whatever it is? Don't remember anymore. It's been a long time ago. But anyway, I hope they do the right things for them, and I hope they don't let these jokers that can't run anything make their ultimate decisions. So more power to the actual people. It's like workers of the world unite. Not right now. They don't want anything like that. So it's the irony of what's going on is very interesting. Yeah. So Chi-Town Tony, just talk real quick. I didn't cover the Dow tonight. I'll cover it on Sunday night. I'll go through that. But I did talk a little bit about the Japanese yen and what's going on there. So lower Dow, these lower interest rates, all this stuff comes in together. So anyway, folks, once again, hey, another week. And here we are finishing off this week, looking for a positive rotation on our intermediate database, looking for more positives as we come into the year end. Like I said, Sunday night, tune in. I'll be going through longer term aspects of the markets. Thanks again for watching. Thanks so much for being part of the channel. Those of you in the live room, really enjoy hanging out with everybody. So good luck, and I will talk to you on Sunday night.